Hello friends, this is Martin from CK, the channel for learning about trading and investing. Welcome to the weekly market analysis show. We will look at what happened in the stock market over the last week and how we can plan for a better plan for the next week, right? So welcome to markets next week, and this is analysis for the weeks that are starting from April 4th, Monday, tomorrow, 2022. So let's get in these charts first. What a move, look at the rally. This is a 13% up move that has happened, right? It's a wide range bullish move, right? Look at Banknifty candle size, wide range bullish weekly candles that we see very clearly, right? No doubt about that. Look at the daily candles, right? This is also wide range bullish. This looks like an opportunist low pattern. It's super bullish. Look at the size of the candle on last Friday, right? In the Banknifty that you see, it was clear bullishness, no doubt about that. And we had, basically we had a flat pattern that was seen on Nifty and Banknifty also. We had seen that last day also. It was drawn, and it had broken out of that basically, right? And while doing that, the Nifty has taken out 200 EMA, 100 EMA, 50 EMA, all DMAs, and also the Fibonacci 16 retracement from the top, right? So all major resistance are taken out. And look at Banknifty on the right side, right? It has taken out 200 DMA. It's very crucial. And it has taken out all the other major moving average resistances are out now. And this is on the short term way speaking. But the only problem is it still has to clear the gap resistance. Look at this gap, inches away from that, right? So most likely it will, it will clear out that. But Fibonacci 61 retracement, about 38,000 is also there, right? That is also important to clear that also to have some confirmation of the uptrend, right? And the Bollinger Bands, if you see, right, you can see the expansion on the upper band, which indicates the price move. Even Banknifty also, the expansion started. But keep in mind that the width between the median and the upper and the lower bands are very wide, so there will be volatility. There will be sudden dips, huge moves. Downfall also is possible. Upfall also is possible, right? So highly volatile, with the bullish bias is what the Bollinger Bands is saying for both the indices, right? So let's. Before getting into support resistance, let's just quickly see, so 520 points, 3% up move is what happened, last week for the, so it's a wide range bullish candle, and weekly 20 moving average is also taken out, right, on both indices. And Banknifty moved 5%, 1,757 points last week, right? So the thing is gap resistance and Fibonacci has to be cleared now. That's all. Daily also, it's daily candles also wide range bullish. 200 EMA is taken out, all major resistances cleared, 61 Fibonacci also cleared, and Bollinger Bands we're already seen. So let's proceed. Support resistance levels, if you see, we did support the 17,500, 17,600 Fibonacci retrace below on the, not on the last swing, but from the lowest swing that you see, right? So above that you have 17,800 and 17,850, that is the resistance, then 17,950, 18,000 rounding number, that the resistance in the upside, then 18,100, 200, right? That's how it is. Downside, the first support would be 17,500, 17,600 Fibonacci we have seen. Below that you have 17,350, 7,400, and then below that 17,200, 7,300, and support 17,000 rounding number, right? That's a flag that you can see which is breaking out. Banknifty, resistance right now at the 36,900, 37,900, that range. That's where it is, right? Once that is clear and the gap has to be closed, little more is there, 17,318 or something. The gap gets filled, right? That's the resistance there. Then 37,300, 37,500 Fibonacci 23. That's very crucial to have a close there. Then Fibonacci 16 also comes near to 38,000. So 37,700 to 37,800, 38,000, 38,100 resistance, and upside 38,350 and 38,500. That's how the resistance. That's how the resistance on the Banknifty is. Momentum, if you see, it's bullish momentum, and it is rising in the short term, and medium term it is sideways but rising up. Banknifty continue to be sideways. It is not still completely moved to the bullish zones, right? But it's rising, and very soon it's going to take it up. It's inches away from the RSI 60 mark, right? So medium term it's sideways as like Nifty. Not a the thing. See, the trend indicator ADX is showing that it is DMA positive on the bullish zones, for both the indices. But and it is having a trend rising also. But medium term it is DMA. Medium term the trend has not. Medium term is in weekly charts, right? So medium term the trend, it will take some more time for the trend to completely change, when they, so that's how it is, right? So that's a trend indication, and that's momentum. This is what you're talking about, the momentum. Now divergency does jumped into the bullish zones. Nifty, Banknifty inches away from the bullish zones, right? and the ADX indicator is rising up on the short term, rising up on Banknifty also in the short term. Clearly in the day, my positive zones. The trend is clearly bullish on the short term. Volatility cooled off for the 22%. This is what the big thing that happened last week is that 22% of fall cool off fear and greed indicator is done with. Now we just need to watch whether this range between 20 and 15 or 20 and whatever it is forming, that's maintained or not. If it again spikes back to 20, that means the fear and greed has come back again. So that is something that you have to be still cautious because the war is still there, right? Open interest data, we'll see in the next slide, levels and all that, but basically it's a short covering that is seen in the futures open interest data on both the indices. Short covering is kind of bullish and people who are short now thinking of going long, and so the market suddenly the other side of the bearish. Suddenly people, it can be big moves that can come. And there is some good news is where the short covering happens. And that's what the futures option interest start indicating. But operators on the options data, and we'll see in the next slide, that's for the April 7th weekly expiry. So that is indicating that the put call ratio, right? Put call ratio is 1.19 on the Nifty and 1.31 on the Banknifty. So that is clear super bullish, right? And short covering you already seen. That's what the futures option does. So look at this put writing that is in some unwinding of the calls has started, and this is early beginning of the month, right? And beginning of the week basically, right? So unwinding has happened here also. Bank Nifty also you can see that calls are getting unwritten. So look at the level 16,500 to 18,000. That's where the support and the resistance is highest return. 17,500 and 17,600 is where the highest risk. The second level of resistance is that is seen, right? The second level maximum put and call rating is seen as 70,500 and 70,600. Bank Nifty 36,500 to 38,000 is where the highest put and call rating is there. And then you have 35,000 and 37,500 levels, which are the second level of put and call rating. 1.31 is bullish. That we have seen put call ratio. So all the operators on both futures and options are showing that it's bullish. Sector will watch is 0.5% flat. No, 0.5% move, not really flat, but 0.5% move only that happened in IT last week. November, it is near the very all-time high of the IT index basically. Short-term momentum is sideways. It had slipped to the sideways, so it's remaining there. Nothing. And medium term also sideways. So overall, IT is not broken out for the bullish zones yet. But metal showed indecisiveness last week. It's a dodgy candle, but the thing is, it had broken out. With big move. So last week was flat, but the previous week was a breakout. Now you have to be cautious, right? But you can be bullish because the medium term and the short term is bullish. So medium term bets can still long positions can continue, or you can take fresh positions also. But you have to be cautious with tight stops. Auto sector moved up. Pharma, FMCG also moved up, and reality also moved up. Only sector that didn't do well is IT and pharma, right? Those are good. And metal also didn't do nothing much last week, right? They're all flats. But metal is bullish overall. IT sideways, and auto is up and still remains sideways. All others are sideways. But reality has now moved to the bullish zones with 5% move. So reality, on the weekly charts, it's not bullish yet. But since medium term it is bullish, probably you can try your luck with or you can wait some more to get a confident entry in that. But big moves have happened in the reality sector. Big moves. It's a cup and handle breakout. We can see the charts here basically. Yeah. Look at reality sector. It's a cup and handle pattern, right? Remember, it's moving very, very, very nice, beautifully. It's a weekly chart, and it has taken exactly the neckline of the breakout. It has taken a support there, and boom, it has bounced beautifully, right? So this, and the momentum is there to catch up on the weekly, right? But on the daily, it's already bullish. So that's what it. IT index, you can see this is very, very near to the all-time high levels. Metal has broken out and now it is indecisive. Cautiously bullish, but metal is the only sector which is bullish on both the time frames of weekly and daily, right? Auto is kind of consolidating. Now it is up move, but it is done well last week, right? Pharma did not do indecisiveness on the top of the channel. A major resistance on it is trying to take away. It may take some time, right? And FMCG is bullish. You can clearly see that it's taking out that resistance on the top and closed above that, right? But momentum has to catch up on the weekly, so have to wait. But overall, it is also doing good. All sectors have done well except except that the momentum is set to catch up for both. Bullishness has arrived only in metals, right? Others are catching up. Index heavyweights, if you see, HDFC has done a beautiful up move. Fyers are buying means obviously HDFC will be up, right? HDFC twin also has, now it's a major resistance for the HDFC bank. You have the resistance on the upside. Remember that 15,445 gave resistance, and above that 1643. But so weekly charts both. If DFC is currently dealing with the resistance zone, but if that is cleared, then it can move. And remember that it has taken a bounce from the support after taking a range shift. So momentum got a beautiful pattern that is formed on the on the momentum side, right? Price is shifted the gear from these bearish zones into the sideways zones on a medium term, and then bounced up from there. This is beautiful, and it is clear bullishness. It can take it to the next resistance on the upside of 299 20900 levels, right? So HDFC finance, HDFC, and HDFC bank is doing, but HDFC is doing better than the bank entity, right? Lions, look at the mega moves. This was the stock that moved. This was the stock that moved the market last week and the week before that also, right? So you're seeing that the bounce, it's a weekly cup and handle pattern, and it has taken beautiful supports and medium time frame, and then bounce continuous 4 weeks, 20% above, up move is what you see. Very nice move, very nice, right? Move is happening in the lines. That's another heavyweight that moved the markets. And now Infosys is very near the all-time high, but good move last week. Also, it has climbed into the bullish zones on the weekly, medium term also. So it's bullish, but you have to be cautious because it's near an all-time high. Some resistance may be expected. Tata Consultancy also beautiful bounce from the channel edge and also from the support, major support zone from where it broken out. That's with good volumes, and but the momentum is very slow for some reason on the TCS, right? So we'll have to wait for that to catch up before we can have solid bets on the stock. ICICI Bank is another index heavyweight which is trying to take out the resistance zone. It's a major. Next day will tell the story. Next week, right? Whether it's able to move further above from this resistance zone or not, is something that we have to watch out. But momentum is weekly rising up, clearly bouncing from the support zone of the RSI 40. Very good move, very good bounce up that was. But yeah, so you'll have to wait some more to for the stock to move up, after taking this major resistance zone. Right? Kodak also showing in green. It is hovering around the same support zone, where it has been doing since long. But it is a very good support on the momentum also, not just price, right? Momentum also clearly saying that zigzag, but it is never ready to dip below that, right? So that's a beautiful support. It may take time for the stock to gain the momentum, but at least it's not ready to go down. That's what. Institutional participation data, if you see 5,588 crores of buying happened by Fyers. After a long time, you're seeing only greens, for 3-4 days consecutively, right? Even though the amount is not great, but it's good buying, right? Look at domestic institutions, 5,000 crores of buying again, right? That's what moved the market. So both of them joined and market moved up, right? Although the last day they had a small sell-off by domestic institution, but otherwise very good institutional participation that we are seeing now coming back. Now US markets were flat, right? It was kind of indecisive. All the indices, Dow, S&P 500, and you can see that it's indecisive, dodgy inside bar, and this is it's not sure what to do. Momentum is all on the medium term is actually sideways only. So it is still not gotten any bullishness about. So it's indecisive basically. Last week was indecisive basically. Nasdaq also, you can see that it is kind of small body candle, right? Although it closed above the previous candle last week. Yeah, even the S&P 500 also, you can see a indecisiveness, although the close is above the previous close. But yeah, so overall sideways and indecisive patterns is what you see on the global markets, especially US markets. And so that's closely connected to our markets. So we have to keep a close watch on those. Now dollar index is kind of consolidating at the major resistance zone, right? It's formed a red 0.25% down and 98.56 where it is, and USDINR 4 point also pulled off a little bit, right? On the top chart that you're seeing USDINR, right? It has cooled off. It's at the edge. Some intervention from the RBI may be happening, so it is cooled off below 76 level at least now. So we may have shrunk a little bit on the last week, but it's at a high level, right? But it is at a very good support zone also, right? So less likely that it will fall below that 75 levels very soon, right? Given the level uncertainties and inflation and all this. But yeah, if as money is coming means definitely crude oil is cooled off. So this is all chart. Crude oil had cooled off, but I had not updated the details here. Crude oil had cooled off a lot last week, right? It's I think 12% of cool off has happened, right? And crude oil has closed at 98.5, right? 98.5. This level, it is this is a wrong figure. 98.5. So crude oil cooled off. Good thing for us, right? That's a good thing that has happened. But gold fall down after an attempt to rise up, right? It closed down. How much is it? 1.75 down after it. So remember that gold had attempted to break out and hit the inches away from the all-time high. It fell into the selling pressure, and then it took a support, and then in the previous week it attempted to move again, but coming back. So it looks like it may take a while before it may be very slow, but remember the bullishness is still there, momentum. So anytime it can do that, but yeah, it's going to stay a long time at this level, right? Remember that below support region it had stayed a very long time, very long time. So the momentum is very slow in the Vault, right? The long term, it's the price patterns are bullish. Momentum also bullish on the medium term, right? Two stock picks in TPC, power stocks are breaking out. All power stocks are performing. So NTPC has long way to go up to the channel tops. That's why this maybe a right risk reward and right price also probably. Right? Resistance is at 152. Position size accordingly. Pound was caught up in the bullish zones. Trend has changed in the bullish zones. Volumes are okay. Above moving average. Second one is Hindustan Aeronautical (HAL). It also seems to be breaking out, but you put tight stop losses, because this resistance, only if there is a high above the previous candle only should enter. Volumes are good, momentum is good, trend is good, right? Hindustan Aeronautics and NTPC, two picks. This is a diagonal split, right? Where we are selling 17,900 call option for this week, and then buying 18,100 call option for the next weekly expiry, right? Probability is a little less, but calendar splits are like that. It may not indicate the exact probability, but this reward is okay, and you don't have to wait till the entire profit comes in, right? And position size put in as per your capital. But the range is good. That's the beauty of this. I was trying to get a good range because there's uncertainty, right? It can cool off a little bit before it has taken a big move on Friday. So, right on the last week, a good move now. Sustain that move, it may take some more pausing or some more retracement. All that can come in, but I'm believing that the range of 7,500 and 18,000 may hold good for the next week. So that way, if you look at this, could be a good rate. So the wrap up is I'm moderate bullish, moderate. That's all, right. Why? Because now why I'm bullish? Because it's a 13% good recovery that has happened in the market. So the strength of the retailers, FIs have come in, VIX has fallen off, price patterns are bullish, momentum is short term, momentum and trend is clearly bullish. So, but US markets was kind of indecisive, so you have to keep a close watch on next week also when you're trading about as to whether it is able to consolidate or or move up or is it falling down. So you have to keep a close watch there. So there's uncertainty in the weekly candles after a big bounce that happens from support. There is inflation, Fed interest hiking that is happening, Russia-Ukraine war still going on. So there's some peace or cold off has happened. So this will cause sudden fear in the market, and in one night all the gains will go. So uncertainty is still there. Although the VIX is cold off, you have to be cautious. Positive factor is the strength of the concept. the strength of the confidence of the retailers who are putting in money, right? Mutual funds and institutional money is coming, so that's another positive thing. So all the banks are expanding on the upside. That's also clear positions on the short term. So the week's level you have to be cautious. It has cooled off below come to 18 kind of levels. So whether it's going back to 25 or 22, 3 and again back, then you have to be absolutely alert. Now Bank Nifty is a worry. It has Fibonacci 61 to clear, and the gap resistance also has to be clear. Although it cleared the 200 EMA in the short term. So medium term you can right, it has to clear 18350 to clearly say that the bulls are roaring. If you have to say that, then it just had to clear the 18350 where it had made a previous swing low, right? Otherwise it could be just a retracement and it may fall back to where it came from, right? So all that can happen. So I have to be cautious. Fibonacci 61 retracement level has to be cleared, right? So yeah, this was the same material there. So 17,500, whether it's sustained today or in this next week or not is what we have to see basically. Downside levels, you know that it's 34,000 and 5,900, where the neckline of the double top pattern still be there in the medium. So medium term the trend has not fully changed. So you have to be cautious basically. Short term bullishness can end. Medium term charts is what you have to look at when you're taking positions for a large number of days, right? So in short term there is no doubt about it, it's clear. The next week clear bullishness is what that's for sure. And overnight positions as usual, whether it's medium term, short term, whatever it is, you have to define your risk, because overnight you don't know which war or what uncertain event comes in, you never know. So so next day it can wipe out your entire capital. So risk defined, non risk defined strategies like non-directional, vertical, current or whatever is all that you have to take care of. Rest the market can give you, right, if you are consistent. So that's the view, the moderate bullish view for next week. The bullishness word itself is coming after a long time. All right, but yeah, that's my view on based on all the parameters that we had studied in the previous slides. Look at these charts and study yourself and then come out with your own market view and take your positions accordingly for the next week, right? So happy trading, happy learning. Thanks for watching, and we have very few subscriptions. Kindly help us improve the subscriptions by putting in comments, sharing it to maximum friends, colleagues, everyone, and hit the like button if you find some value in this, right? Thanks for watching, happy trading. Bye.